to my morning report analysis videos on Thursday the 28th of September with me, Richard Brown, market analyst at Hantec Markets. Now we've got a fairly sort of dollar positive move that we've seen on the back of this announcement from Donald Trump and the Republicans yesterday about tax reform. Now tax reform, I think, or the success of tax reform going forward will be a major factor as to whether the dollar can drive forward. And yesterday we saw that, breaking that big downtrend channel that we've seen on the dollar for the past sort of 6 months and looking to push higher. Now this has come as Treasury yields spiked higher yesterday and continuing that move today. And what we've seen is this, I think, as I said, Treasury yields and the dollar being, if tax reform can be pushed through Congress in its sort of current form or thereabouts, I think the market will take that as a very positive move and possibly even resume the Trump trade. But for now, we've seen a little bit of consolidation as the 2-year yield has just pulled back slightly after early morning upside. But this is the interesting chart as well. The 2-10 spread is now the widest for a month. And that suggests that the yield curve is steepening on the back of this news. Now, we've got this move that has dragged dollar strength, as I said. A little bit of consolidation with the euro sort of finding a bit of support today. But sterling is lower this morning after Mark Carney started to speak. He's sort of suggesting that Brexit is really important for the direction of the UK economy. That sort of seen the pound being dampened down a little bit. The dollar yen has early gains have been reversed, and also early gains on the gold, early decline on the gold chart have also been reversed. So it's a little bit of retracement of those early moves, but equity markets remain strong as they saw the S&P 500 and Wall Street sort of gaining strongly on that tax reform news yesterday. And just generally speaking, as I said, the dollar is sort of strong across all the less important majors outside the G4, but certainly the dollar moves, I think, in the coming days and weeks are going to be governed by this progress on tax reform. So what have we got to look forward to today on the data front? Well, we've got German inflation, we've got the final reading in GDP for the US at 1:30, and FOMC's Stanley Fischer at 3:15. But main focus, I think, will obviously come on that GDP announcement for the States. But throughout the morning, we see the German inflation data announced by the states and on a state level, and then at 1 o'clock this afternoon we get the country inflation data. So it's expected to stay at 1.8% on the year-on-year CPI. The US GDP revision is not expected to change at 3% in the final reading, so that would sort of maintain the current status quo there of GDP around about sort of 2% running for the year across sort of Q1 and Q2 as an aggregate, and then Q3 is around about 2% again. So yeah, just basically in line with that level. And then Stanley Fischer this afternoon is sort of bordering on one of the more sort of centrist / hawkish members of the FOMC, but he is standing down in October, so likely, I mean, I'm going to be interested to see if this is his last speech. But my chart today is Euro Sterling. Now, what we have seen on Euro Sterling is a sharp correction, and it looks as though that sort of consolidation over the last week has started to track to the downside. A little bit of a recovery on the back of Mark Carney speaking today, but generally speaking, I think you would argue that the market has sort of rolled over, really. It's sort of starting to form lower highs. Yes, you've seen this sort of move this morning on sterling, but I think once the market sort of begins to settle down, I think that would be sort of see the resumption of that move to the downside. You've got initial resistance on the hourly chart around 88.15, and then if I zoom back out, and then 88.40 comes in as a bit of a pivot as well. So a few levels to sort of start to see whether we're going to see another lower high. But generally speaking, I think these momentum indicators are set up for selling into strength. Interesting that we've got the market back to this key uptrend, this key long-term uptrend that the market has been in since November 2015 is being tested. But not only that, we can see this this support at 87.40 also sort of coming under threat. So this is the market back around key levels, and yes, it's sort of pulled higher again. But if we see another lower high, we could see that uptrend under pressure again, and also the support of that key July low. If that gets broken to the downside, you'd start to think about being further retracement towards 86.50. And then possibly even further lower, but certainly looks as though that the market is sort of still in this corrective phase. And yes, it's held on to the uptrend, but how will that continue? It'll be interesting to see, as these momentum indicators are still pretty correctively configured, aren't they? So I wish you good luck in your trading today, and I will speak to you later. Thank you.